Congratulations, and welcome to this retirement webinar brought to you by Wespath. I am Cheryl Hatcher, a team member of Wespath's Benefit Plans Department. It is my pleasure to moderate this webinar. Please note that I will be recording the webinar and I will be keeping everyone on mute. Due to the amount of information that will be imparted to you within this next hour, we will be keeping questions to a minimum. Because of this, I highly encourage you to set up a one-on-one consultation with the benefits educator to discuss all of your specific questions and how this retirement information affects you and your family. As soon as I have the link to the recording, I'll be sending that out to you via email. In that email, there will be a link to set up your one-on-one benefit educator consultation. Now, to get started with the webinar, it is my honor to introduce you to today's distinguished speakers. All of them are thoughtful and knowledgeable employees of Wespath who take pride in helping United Methodist clergy and laity understand the intricacies of the retirement and investments. Your incredible team consists of Bob Christophel, coming to you from Long Island, New York, Ronald Theodore in Evanston, Illinois, Todd Creviston in Montgomery, Illinois, and Frank O'Brien, also in Long Island, New York. Please bear with us with this technology while we switch amongst the presenters. So it is now my pleasure to turn the presentation over to Bob Christophel, who will start us all off. There we go.
Good afternoon, everyone, and welcome to the webinar. Cheryl, thank you for that nice introduction. The coronavirus has created significant disruption in our regular lives, and this includes our churches, our schools, our workplaces, and really our very lifestyle. This has led to a lot of concern and anxiety among our participants, particularly those that are retiring this year. With sheltering at home restrictions, the closing of non-essential businesses has only increased this level of concern and anxiety. The COVID-19 pandemic has caused wild swings in the stock market, and these disruptions have had economic implications. We've gone from a recent stock market high to a market correction, and it just remains too early to predict exactly when markets will recover. We've seen general conference and annual conferences canceled. All on-site retirement seminars that the benefit education team usually does this time of year has been canceled, as well as countless other events. All this has led to increased uncertainty and for the retirement picture to change and become blurry for some. Some benefits are unchanged, not affected by market fluctuations, and we're going to discuss these plans today. The pre-82 plan using the formula benefit, not impacted by market fluctuations. Your clergy retirement security program, the defined benefit component, has not been impacted by market fluctuations, and neither is your Social Security retirement benefit. This has led us to having to face a new reality. And I just want to go over some things to consider when you're facing this new reality. Think about how has your benefit amount changed. Review your benefit access account regularly. Look at previous projections that you might have received. Think about how much income you'll have, including income from other sources, including a spouse. How much do you need? Think about what plans this income will come from. Think about your monthly budgets, your anticipated retirement lifestyle, and anticipated housing cost in retirement. Do you need to modify your retirement plans? Consider what Wespath retirement plans you can delay receiving your benefits from, and we will cover that today. This will include the ministerial pension plan and your defined contribution account balances. What Wespath plan should I immediately begin receiving at retirement? And this would include your clergy retirement security program, that defined benefit component, as well as any pre-82 benefits that you're entitled to. Who can help you decide when you're facing this new reality? Well, let's start with Wespath. We are committed to helping you navigate through these turbulent waters as you approach retirement after years of dedicated service. And we've actually expanded our support services for you and other clergy who are intending to retire in 2020. We're going to have one-on-one follow-up consultations available with one of the benefit educators that you saw on the screen earlier. These are going to begin next week, scheduled for April 6th, 7th, 8th, and 9th, and they're going to continue in the weeks thereafter. We're committed to meeting with each one of you individually. We have a record number of attendees on this webinar, and we know you do have questions, we know you do have concerns, and we know we're not able to answer all of these questions during this webinar, but just be on the lookout for that follow-up email that Cheryl had mentioned. You also have EY, Financial Planning Services. Those are folks that you can call and discuss your individual situation. You can call the retirement team at Wespath. So a link to the recording will follow shortly after this webinar. You can view it again, and please reach out to us. We're here to help and continue to care for those who serve. So what we'll learn today is quite a bit of information. We'll go through the 2020 retirement process, which we'll go through benefit access. We'll talk a lot this afternoon about benefit access. And then we'll take you through the Wespath retirement plans. We'll indicate what plan, what choices, what elections you need to make, what plans you can wait on. So we'll begin with the Ministerial Pension Plan, or MPP, followed by CRISP, Clergy Retirement Security Program, right into the Pre-82 Plan, and then the UMPIP, United Methodist Personal Investment Plan. We will discuss Life Stage Suite of Services with a particular focus on Life Stage Retirement Income to help you calculate from your account balances how much you can take out on a monthly basis. We'll cover the Housing Allowance Exclusion, a very important tax break in your retired status. The Comprehensive Protection Plan will look specifically at death benefits in your retired status. We'll take you through the processing of your benefits, when exactly you can expect to receive your first monthly direct deposits. And we also want to walk you through the screens on benefit access. Some of you might have been on benefit access already. Others might have not registered yet. We'll take you through that process. As I mentioned, the retirement process goes through benefit access. So if you have not registered yet, it's easier to do than ever, a very simplified registration process. And we encourage you to make your choices. Here we are in early April. Okay, we have not just weeks, but months to make these decisions. But please don't wait until June 30th to make these decisions. You have plenty of time to sit through this webinar, to schedule consultations, to call EY, and to speak to our retirement team. So give it time, and hopefully the retirement picture will become clearer as we move forward. This is just a screenshot from benefit access. We'll talk a lot about benefit access this afternoon. In particular, I want to point out on your home screen, if you are on the intends to retire list, you will see something that wasn't there previously, a green review button. And that button is very important. When you click on that, that's your portal to reach your retirement benefits. So you click on that review button, and the first thing you'll see is a summary of your retirement benefits up top. Doesn't mean you need to take all of those plans at once, but it's a summary of your annuity payments, your cash account balances, calculated using life stage retirement income. And then you'll notice for each plan that you're eligible for, you'll see a button that says Get Started. So each plan you need to go through. And we'll walk you through one example later on. On the bottom of the screen, that talks about your account balances. And if you need to receive that as income, there's a way to sign up for that immediately. More on benefit access later on. Let's begin our discussion, and we're going to go through all of these plans. And those of you that have been in ministry for a long time, you know these plans have changed. They have evolved, going from the Pre-82 plan to the Ministerial Pension Plan to where we currently exist right now under the Clergy Retirement Security Program. And then off to the side, that green circle kind of operating independently, that voluntary plan, United Methodist Personal Investment Plan. So what our goal here is to talk about each plan, how it works, when you need to take it, and what those decisions will be regarding each of these plans. So beginning with ministerial pension plan, which does show up as an account balance on your quarterly statement. That existed from 1982 through the end of 2006. And what makes ministerial pension plan important is that it provides two different things, both a lifetime benefit, a monthly direct deposit that you cannot outlive, as well as the possibility of continuing that benefit to your surviving spouse. So really covering two lifetimes. The financial security of knowing that if you live to be 100, you'll still get your monthly income. The second component is also important. That's an account balance. An account balance gives you control and flexibility, including the option of doing nothing with that account balance right away. It will continue to be invested. Right now, your MPP has been invested using Life Stage Investment Management, and I would encourage you on Benefit Access to look at your ministerial pension plan account balance, which is separate from any other plan balances. And just what I want you to focus on is the pie chart, the asset allocation, which tells you exactly where your MPP money is being invested. And you may be surprised to find that it's not as heavily invested as the stock market as you might have thought it was. So take a look at those asset allocations. If you're looking at, for example, a normal retirement age 65, and you don't need the income from the ministerial pension plan right away, you do not need to take it. You do not need to annuitize it until generally when you reach the age of 72. So you could have several additional years where that money would be invested. If you need this income right away or at some point in the future, what happens with MPP is as follows. Exactly 65% of your account balance becomes a lifetime annuity, lasting 1 or 2 lifetimes. You will have 6 different life annuities to choose from. And I do think it's important, obviously, to understand the choice you make, but it's also important to understand the other 5 choices that you did not make. Also, you need to think about a cost of living adjustment, referred to as a COLA, which is an annual increase in your benefit. I always tell the retiree class, if you're going to be taking MPP, focus on the 65% first. Those decisions, once you're set up on a pension payroll, are not revocable. You have several months to make that decision. If you made your decision on benefit access, let's say, for example, next month, and change your mind, you're allowed to go in and cancel that pending transaction. But again, those decisions become not revocable after July 1. The 35% account balance, that you can leave on your account. You'll also have other options with that 35% of your MPP, which we will discuss. For purposes of this webinar, when I say annuity or annuity type, I'm really just referring to a series of monthly payments, monthly income, monthly direct deposits that last, again, your lifetime, and if elected, will continue for the lifetime of your spouse. The 65%, the larger of the piece of MPP, we look at different annuity factors to calculate your exact benefit. And these are important. This is what goes into calculating your monthly benefit. Your age is important. The age of your spouse or other contingent annuitant is certainly important. What exactly is 65% of your account balance? What type of annuity did you select? And I'll walk you through those annuity types in a moment. What percentage of a COLA, cost of living, an annual increase, did you select? 2%, 3%, 4%, or a 5% annual increase? Ministerial pension plan also has the option of a 0% COLA. And we will examine a chart which looks at the impact of choosing either a 0, 2, 3, 4, or 5% COLA. We also look at mortality tables to determine your life expectancy. And finally, a Wespath annuity payout rate is the factor that is used to determine your monthly benefit. 6 different annuities to choose from, 5 different COLA choices to choose from. Let's look first at the annuity types. And the following 2 slides, we have some dollar amounts. This is just an example. This is no one on this webinar's exact MPP amount that's payable. You'll notice 2 columns with dollar amounts. We pay the column labeled payable to you first. You die, move to the right, we pay that amount to the contingent annuitant. Often that's going to be a spouse. So if you're looking at this first 3, and this is really the standard form of payment for a married clergy person, let's look first at the highest dollar amount on this chart. In this example is $1,284. That represents an annuity type described as a life and 70% annuity. So the lifetime benefit is the $1,284, 2% COLA increase. The clergy person dies, $899 would continue to the surviving spouse. So what you want to do is look at those amounts payable to the spouse, the contingent annuitant, and ask yourself, is that enough? Is $899 in this example enough? And the answer may be no, it's not. Let me also consider the life and 85% annuity type. And you'll notice 2 things happen here. The $1,284 goes down to $1,239, but the $899 goes up more to $1,053, 85% of the amount that was payable to you. You also want to consider the life and 100% annuity type. And there you see that the amounts continue uninterrupted, $1,196, same amount continuing to the surviving spouse. So those are 3 life and percentage annuity types. In addition, there are 3 single life annuity types. If you are married and choose one of these annuity types, you will need to have your spouse agree, consent, and sign a waiver, understanding that they're giving up their right to receive a survivor benefit from your ministerial pension plan, 65% annuitized portion. And obviously you notice these amounts are higher. These are higher because they only provide payments for 1 lifetime. And we just don't know how long that lifetime will be. So let's look at the first row, the single life only. Payable amount in this example, $1,551. If the retired clergy person lives 33 years in retirement, they will continue to receive payments for those 33 years. It is a lifetime benefit. If they choose the single life only and they die after 6 months in retirement, payments stop. The other 2 annuity types, life with 5-year certain and life with 10-year certain, guarantee that payments will be made for at least a certain period of time, 5 or 10 years. Again, there's no option in which the monthly direct deposits will stop for the clergy person. But under the 5 and the 10-year certain annuity types, the benefit might stop for someone else. And I'll just give you 2 quick examples. Let's say that the life with 5-year certain is chosen. The amount drops a little bit in this example to $1,540. Clergy person picks the 5-year option. They live 23 years in retirement. The payments continued. They die. The 5-year term is long up. Payments cease. Where it does matter, though, let's say, for example, life with 10-year certain annuity type is chosen, and the clergy person passes away after 7 years. The 10-year term is not up. Payments will be made to someone else, a designated beneficiary, for the remainder, the next 3 years left on the term. If that person that you had designated predeceases you, you can name or designate someone else. 10-year certain means 10 years of payments at least. 5-year certain means 5 years of payments at least. So those are the annuity types. 3 life with percentage, 3 single life annuities, and then the COLA decision needs to be made. What cost of living adjustment? And it's important to keep in mind that COLA decisions will impact the dollar amount of your monthly benefit right out of the gate. For example, if you're starting this plan on July 1, you have choices with COLA. The default is 2%. And when you go onto benefit access, you will see 2% listed, but it's a drop down, and you can change that to the other COLA options, 3, 4, 5, or 0. So let's just look in this chart. Let's look together at the two extremes. Represented by the orange line, that's the one that starts out on the bottom to your left at age 65. That is a 5% COLA. That is a significant annual increase in your benefit. And because of that, you're going to start out with the lowest monthly payment, but it's going to be increased every year by 5%. The other extreme is the 0% COLA, represented by that red line, that flat, straight red line right through the middle of this chart. With a 0% COLA, you could expect to receive the highest monthly benefit, but every year it's going to remain the same. There's not going to be an increase in that amount. So even though you started out with the highest benefit, after an amount of years, you could end up with the lowest monthly benefit. These COLA options are important to consider. And the reason they're important to consider is because the impact of inflation on your purchasing power going forward. $1,000 a month today in income, for example, is not the same as $1,000 a month 5 or 10 years from now. On your benefit access, this is setting up the MPP annuity. So you had clicked on Get Started, and then you'll see these options here. It'll be pre-populated with life in 70% and a 2% COLA. But what you can do is use the drop-down menu and put in a different COLA. And what's nice about benefit access, when you change the COLA, you'll see the numbers above it for the annuity types. The monthly payment will change immediately, and more on benefit access later on. Let's review these considerations. With the ministerial pension plan, again, it is an account balance. It does use life stage investment management to manage that account balance. You can leave it on account until the required beginning date, which is generally at age 72. You're going to have different annuities to choose from, 6 different. 3 of those are the joint and survivor annuities, 2 lifetimes, plus some single life annuity options, plus different COLA, cost of living, annual adjustments, which are really important for retirees. The 35% that is not annuitized, you're going to have choices. And the one I see chosen most often, the clergy will check the box on benefit access that says, hey, just roll this money over into the United Methodist Personal Investment Plan, or if you're inclined, you can roll it over out of Wespath to another retirement plan. And later on in the webinar, we'll talk about reasons why that might not be a good idea. You can take this money in installments. You might need it as income. Doesn't have to be right away. You can self-manage that monthly income. You tell Wespath how much you need based upon your expenses, based upon your budget, or you can use a terrific service called Life Stage Retirement Income. And we'll have some screenshots of Life Stage Retirement Income, how that important service helps our retirees. You also have the option, you want to consider this very carefully from a tax and financial and retirement planning perspective, but you can take this money as a one-time cash distribution. So we've covered a lot about this ministerial pension plan. Now, just to review, it's an account balance. Don't need to take it generally till age 72. It'll still be invested for you. 6 different annuities to choose from, different COLA options. The next plan we're going to talk about is the plan in which we exist under right now, the Clergy Retirement Security Program. And I just want to introduce you to benefit educator Ron Theodore, and he is going to take you through CRSP, explain everything you need to know about that plan. Take it over, Ron. Thank you.
Thank you, Bob. Good afternoon, everyone, and thank you for joining me, and thank you for handing that off, Bob. My name is Ronald Theodore, and today I'm going to talk to you about the Clergy Retirement Security Program plan. This Clergy Retirement Security Program was enacted in 2007. And this is what replaced the ministerial pension plan. As you can see here, this clergy retirement security program has two periods for which benefits are calculated on the defined benefit portion services, as well as a period for the defined contribution portion. There are benefits that are also contributed on your behalf. The Clergy Retirement Security Program has two components. As this is a special program, the Clergy Retirement Security Program provides an account balance, which we like to refer to as a defined contribution, to which contributions have been made into this account balance by plan sponsors. The other component to this Clergy Retirement Security Program is the monthly benefit portion. This is referred to as the defined benefit plan portion. This defined benefit portion is kind of in relation to the ministerial pension plan, 65%, because this is also an annuity. The main difference from the annuity portion of the ministerial pension plan and this clergy retirement security program defined benefit is that this defined benefit is not directly impacted by market fluctuation. Let's take a look at how this benefit is calculated. Remember in my first slide, I mentioned that the clergy retirement security program is based on a monthly benefit accrued by credited years of service. And this service for period of January 1, 2007 to December 31, 2013 is being calculated using the current year denominational average compensation multiplied by a percentage of 1.25%. At the time of retirement, the DAC being 72,648 multiplied by 0.0125 multiplied by 7 years for that first service period gives you a benefit of $6,357. Since benefits are paid on a monthly basis and not annually, this participant in this example would receive a benefit of $530 on a monthly basis. The second piece of the Clergy Retirement Security Program defined benefit is for the service from January 1, 2014 to the participant's retirement date. And in this example, it's June 30th, 2020. You all may notice a change in this calculation based on some rulings back in General Conference 2012. There were some decisions that were made, and this is one of the impacts of that. Participants are began to accrue credited years of service at 1% rather than 1.25% for the service of 2007 to 2013. So all those who have Clergy Retirement Security Program defined benefit for service from 2014 January 1 to your retirement date, you are gaining credited years of service at 1%. So your calculation is as follows: 72,648 multiplied by 0.01 multiplied by 6.5 years gives you an annual benefit of $4,722 divided by 12, which gives you a benefit of $394 monthly. But wait, we're not done. Both those service periods will give you a total monthly benefit, estimated monthly benefit based on this example, at retirement of $924 per month for the Clergy Retirement Security Program defined benefit. Now, given that this is an example, and this example reflects a single participant, some other considerations to take into place. Surviving spouse benefits for those that are married. Those surviving spouse benefits could or would impact your benefit to where you could receive a decreased amount of this 924 based on whether or not a participant is selecting life in 70, life in 85, or life in 100, as Bob mentioned in the annuity, 6 life annuity factors slides. In addition, cost of living increase. Cost of living increase, if choosing a higher cost of living increase, would reduce this projected 924 benefit. Or if one were to choose a lower cost of living increase, could increase this amount. Again, cost of living increases for the Clergy Retirement Security Program defined benefit are generally applied in January each year following the participants' setup of the Clergy Retirement Security Program benefit. And again, the last consideration you want to take into account, reduction for early retirement. Those who are considering early retirement would receive a reduction, an actuarial reduction to their benefit at 0.5% per month or 6% per year. Here's an example, a screenshot of the Clergy Retirement Security Program defined benefit application online. As you can see here, there are 2 sections to where you will need to select your form of benefit. The first section reflects your service from 2007 to 2013, and the list of options, life in 70, life in 85, life in 100. And the second section shows your service beginning 1/1/2014 going forward, and its prospective amounts. And at the bottom, you will see the cost of living percentage increase. Now, keep in mind, when making these elections, as you all will be doing in the next several weeks or next month or so, you don't necessarily have to choose the same election annuity types for the different periods. For example, for a participant who wanted to choose joint life in 70 for their service from 2007 to 2013, and life and 100 survivorship for their service beginning 1/1/2014 and beyond, they are free to do so. And all of those changes would be reflected right there on the screen as you are going through the application. And here is a screenshot of the 2% cost of living increase. And once that 2% cost of living increase is adjusted, you will also see those numbers reflected on the screen. Now let's talk about the defined contribution account. This defined contribution account provides flexibility. You have the ability to have these funds directed as you wish through life stage investment management, or for those participants who are self-managing, you can manage those funds on your own. For individuals who decide to retire and not commence these benefits from the Clergy Retirement Security Program, you can leave these funds on account generally until age 72, which is the required minimum distribution age. Now, all of the funds within this account balance are made up of plan sponsor contributions, to which 2% was contributed based on an individual's compensation. And if that participant was contributing at least a minimum of 1% into the United Methodist Personal Investment Plan, they would receive that 1% match back into this plan. Now, just to recap, Clergy Retirement Security Program distribution options. For the Clergy Retirement Security Program defined benefit, keep in mind, this is a monthly benefit. This is your lifetime benefit that you will receive for the remainder of your life. If a participant decides to retire, again, this benefit is not affected by market fluctuation. It would be in a retired participant's best interest to begin this benefit as soon as they retire. There is no added benefit to deferring this Clergy Retirement Security Program defined benefit. Again, you have the ability to select surviving spouse percentages, whether you choose life in 70, 85, or 100. And keep in mind, the different service periods for choosing those percentages don't have to be the same, as well as options for cost of living adjustments. Your cost of living adjustment for the Clergy Retirement Security Program and MPP come with a minimum 2% cost of living increase. For the Clergy Retirement Security Program defined benefit, your cost of living adjustment increase would come at January each year. For the defined contribution accounts, you can leave these funds on account until a required minimum distribution date. You can access these funds in the form of a lump sum distribution or a partial, or if you choose to consolidate all of your funds into one United Methodist Personal Investment Plan, you would be able to do so. To provide additional distribution options, such as life stage retirement income or self-managed retirement income, which Todd will touch on in a few moments. And any remaining balance on account at the time of a participant's passing would be transferred over to beneficiaries. Now let's talk about the pre-82 plan, or also referred to as the Minister's Reserve Pension Fund. Some of you might have pre-82 service. The pre-82 plan is a fairly straightforward plan. For most conferences, we do a pre-82 calculation based on either defined benefit service money, or what we like to refer to as funding, or a straightforward calculation formula benefit based on years time service. This pre-82 plan is a lifetime monthly benefit payment to which we always pay out the greater of the two benefits that have been calculated. Let's take a look at this example below. For this example, we have a participant who served 6 years in pre-82. And for the example purposes, the past service rate in this example is $640. Now, this past service rate is voted on annually during annual conference, to which clergy members, all reverends, vote on and which are passed by their individualized annual conference. In this example, we have a year's time service rate to which would generate $3,840 as an annual benefit. Divided by 12, since benefits are paid on a monthly basis, this year's time service benefit would generate $320 monthly. In relation to a $100,000 defined benefit service money account balance or a funding balance, converted to an annual benefit of $44.24, divided by 12, this would generate a $369 monthly benefit to the participant. I always like to refer to the pre-82 plan as the easiest plan for the participant, because the only decision that they will need to make is whether or not they would like to begin this benefit or defer it until a later date, because we always will automatically pay the greater of the two benefits. And in this example, it is the funding benefit. Here is a slide of what the past service rate would need to be in order for us to pay out a year's time service rate benefit. Now, if conferences choose to, keep voting to increase this past service rate, one day this past service rate may be higher to where we would pay out a year's time service benefit. Again, for pre-82, this benefit is a paid life benefit. For single participants, you would receive a benefit, and in the event of that single participant's passing, no benefits would be paid out upon their death. Benefits would stop. For a married participant who has pre-82, their life and survivor benefit would be based on the conference in which they had pre-82 service for, because each conference sets their surviving spouse benefit. Now we're going to switch gears and talk about the United Methodist Personal Investment Plan. And I am going to transfer it over to Todd, and he will take you all further. One moment. Todd, it's all yours.
Thank you, Ron. Hello, everyone. My name is Todd Creviston, and I am also a benefit educator. I will talk to you today about UMPIP. That's where we'll start, and then I'll review a little bit more about life stage investment management, life stage retirement income, and then I will also cover the housing exclusion and then pass it to Frank for more information, including the CPP program. So as active clergy, you're able to contribute on a pre-tax basis, on an after-tax basis, or you could even designate some of your contributions some of your after-tax contributions as Roth contributions. Wespath has kept track of those for you, and you could see a separate line item or balance on your quarterly statement for each of those different types of contributions. When you take a distribution from a before tax or after tax contribution, you will pay taxes. However, you will have the housing allowance to offset some or all of that income. And again, I'll cover the housing exclusion in a little bit. Roth contributions, those distributions can actually be tax-free if they meet two qualifications. First, they need to be, or three qualifications. First, they need to be designated as a Roth contribution. And then that first contribution must be made 5 years prior to your first withdrawal, and you must be over the age of 59 and a half years old. So as a retired participant, here's a list of all of the different options that you have available as retired clergy. Your first option is to do nothing, and you could leave your UMPIP balance on account with Wespath. Your money will continue to be invested. Once you reach that required minimum distribution age, or RMD, we will let you know how much you need to take, and we will let you know when you need to take it. Your other choices include a full lump sum distribution. That means you would take that full amount as a distribution. We would like to caution you for that. There are some tax consequences for that. You'll pay taxes on that full distribution. We would suggest that you contact or talk to EY or another financial planner that you trust to understand what that looks like. Another option would be a partial lump sum. So this would be, you need $5,000 or $10,000 to remodel the kitchen or potentially put a new roof on your home, or you need money for a down payment to purchase a home. The other option would be cash installments, and the self-managed cash installment would mean that you just tell us how much you'd like to have deposited in your account each month. That could be $100, that could be $500. That's your choice, and you can adjust that as needed. Another really good option is the life stage retirement income. That will actually calculate a monthly payment for you, and that monthly payment is designed to last a lifetime. And I have more information on what life stage retirement income looks like. And then with your defined contribution accounts, any balance at passing would get passed along to your beneficiaries. When you take a distribution from Wespath, we will withhold 20% for taxes for a partial or full distribution. If you take a required minimum distribution, we will withhold 10%. So this isn't a penalty, but it's a credit for the taxes that might be due. You'll see the amount withheld on your 1099 that Wespath mails to you every January. Required minimum distributions, they need to begin the April 1st of the following year after you turn 72. This age was just increased a couple of months ago to 72, beginning in 2020. For those who are 72, you don't need to take an RMD for 2020, so there's no RMD due. The RMD applies to all of your defined contribution accounts. So that's UMPIP, CRSP, DC, and then that 35% of MPP. Subsequent RMDs are required to be taken every year after that, and the amount that needs to be distributed is calculated based off of the December 31st balances. And the IRS publication 590 is a really terrific document that helps to describe and explain a little bit more about RMDs. That's available to you by going to irs.gov and then searching for publication 590. It'll pop right up for you. So now the question that everybody's been waiting for: when will you receive your first retiree distribution? So Wespath aims for the third business day of the month for all new retirees. Because of the July 4th holiday, the third business day in July is actually Monday, July 6th. So that's when you can expect your retiree benefits, your first deposit of retiree benefits. Ongoing, your lifetime benefit payments, those are your annuities based off of CRISP and MPP, those will be credited the first business day of each month. And then the cash installments from life stage retirement income or your self-managed cash installment would be applied to your account on the second or third business day of each month. So let's cover LifeStage. You've heard two different LifeStage products or tools. That's the LifeStage suite of services. LifeStage Investment Management manages your investments, your funds, and those contributions, and also your MPP account as an active clergy person. As a retiree, you can still use LifeStage Investment Management. So that's available to you through your whole experience with Wespath. LifeStage Retirement Income manages the money on the way out. It'll calculate a monthly payment for you from your defined contribution accounts. This tool or service is at no direct cost to you. Ultimately, that payment that it calculates the goal is for it to last a lifetime, and also for the amount to get increased each year to protect you against inflation. There's no guarantee that it will last a lifetime, but it does offer excellent probability. The purpose of LifeStage Retirement Income is to keep retirees from doing two very common things. One is to take out money too quickly and you run out. The second is to take out the money too slowly and potentially your lifestyle changes a little bit and you need to make some choices. And the reality is you didn't need to, you had the money there. So it is designed to calculate a payment within a safety zone so it lasts a lifetime. And this is an example of what that safety zone calculation looks like. On the low end is 608, on the high end is 1237, and the determination is that 827 is a good place to start at. It provides a good monthly payment from those defined contribution accounts. Your annual adjustment will be calculated each November, and that new adjustment will begin in January. You'll receive a letter indicating the change in your payment. And again, those payments are generally expected to increase year over year. However, a decrease is entirely possible. So as you go through your the process of selecting your benefits in the Benefits Access portal, you will arrive at a screen that looks just like this. So what this does, this shows your LifeStage Retirement Income monthly payment. And incidentally, you can opt into LifeStage Retirement Income at any time in retirement, and you can also opt out of it at any time in retirement. So this calculation shows what your monthly payment would be for the first year, and then in November it would get recalculated. Down at the bottom, I'd like to show you that there is an option, and most clergy take this option. They just roll that 35% of their MPP balance into their UMPIP account. And then that will actually be included in that monthly calculation. So now let's chat real quick about the housing allowance exclusion. This is actually a tax break for retired clergy. So as you are in your retired status with your annual conference, this is a significant tax break for you. The tax break is also available to other denominations, and you may know that this has been challenged in the courts and it's been upheld. And Wespath has fought to preserve this tax break for you. It's well deserved for your service. So the question that you'll have to ask yourself each year is, how much income can be excluded from taxes? And you'll need to go through each of these considerations each year, and then you'll select the lowest amount that can be excluded. So the lowest amount of these three options will be excluded or can be excluded from taxes. The first bullet point is the amount that's designated by the annual conference. This generally comes from annual conference resolution designating a housing allowance. I've only heard that it's 100%. So you'll hear about this at your annual conference. So that means 100% of the income coming from Wespath in your retirement can be excluded. The next consideration is the amount actually expended for housing. So in this case, you'll need to keep a bona fide record of your expenses during retirement for each year. That includes your rent payments or mortgage payments, principal payments, interest payments, property taxes, maintenance of the property, utilities, furnishings. All of that can be totaled up to create that the amount that you spend on housing each year. The third consideration, I've heard of clergy working with a real estate agent, whether it's a local real estate agent that they know, or potentially it's a real estate agent in their congregation, can help them come up with the fair rental value of their housing. That includes the cost of the home, mortgage, interest, but it also includes furnishings and utilities. So all of that is put into that consideration. And you should get a letter detailing how that they arrived at that number. You should get a monthly number, and then that should get annualized, because you'll actually include that annual amount in your consideration. So here's a clergy person who received $24,000 in retirement income. 100% of that's been designated, so we place that there. They had a bona fide attempt at keeping track of all of their housing expenses for the year. They arrived at $20,000, so it's documented there. They worked with a local real estate agent, and the real estate agent provided a document that their annual rental value would be $21,000. We know that we can only exclude the lowest of those three considerations. And we arrive at that the exclusion cannot exceed $20,000. So we subtract $20,000. You're excluding $20,000 from your retirement income. So that reduces the taxable amount to $4,000. That's a significant tax break for you as a retired clergy person. We also have more coming up in a mini webinar to describe this in a little bit more detail. Wespath has put together the housing allowance exclusion worksheet. Each three of these considerations are listed on the form, and that will help you determine how much you can or should exclude. So to recap the housing allowance exclusion, this is available to retired clergy. You can actually begin the housing exclusion this July 1 through December 31st when you file your taxes next year. That form is available to you. You can call the retirement team, or you can ask for it in your 30-minute consultation with a benefit educator. And we also invite you to take a look at EY Navigate. There's a tool on there that can help you keep track of those different considerations. On the back of that housing allowance exclusion worksheet, there's some specific language that we think would be good for you to include when you file your IRS Form 1040. And it references why you are excluding income from taxes, and it also cites the actual IRS code. And now I will pass this over to Frank O'Brien to continue our presentation.
Thank you, Todd. While we are in this transition, I will introduce myself. I am Frank O'Brien, a benefits educator here at Wespath. I will be reviewing several topics with you today, including the Comprehensive Protection Plan, or CPP, beneficiary designations, EY financial planning, and spend some more time illustrating the benefit access, benefit election process. CPP in retirement provides a death benefit to eligible participants if you are eligible to receive a clergy retirement benefit at time of retirement and either 25 years total CPP participation or CPP participation immediately preceding retirement. So if you have, say, 40 years with us, we will look at that 40 years, look for 25 years of CPP participation, If you have it, you're eligible. But we will also look at the tranche of the last 15 years. If you've been participating in CPP for 12 of those years, you are also eligible for the death benefit in retirement. For clergy who, here is a death benefit for clergy who retire. I will explain each label and the associated benefit. So if the clergy person passes away, the spouse will receive a death benefit of $20,400. If the spouse passes away before the clergy person will receive a benefit of $15,300. Given a situation where the clergy person has passed away, that benefit got paid to the spouse. Years later, the surviving spouse passes away. The named beneficiaries of the surviving spouse will receive a benefit of $10,200. And in the unfortunate event of the death of an eligible child, then either the clergy person or surviving spouse would receive a benefit of $8,160. And you can see here that this benefit increases 2% every 4 years at General Conference. And at the next General Conference, whenever that is, Wespath has a resolution asking for that 2% increase to occur every year as opposed to every 4 years. We will wait to have to see how that plays out. Beneficiary designation. When it comes to beneficiary designations, you want to control who receives the benefits upon your passing. You want to designate your spouse, children, grandchildren, or a charity. And although we have certain plan defaults in place, for example, your spouse, you do not want to rely on that default. This is about who receives your retirement accounts and death benefit upon your passing. Having beneficiary designations in good order will supersede your will provisions. It bypasses probate court. The proceeds will be provided to whom you want in short order. So we encourage you, as a takeaway from today, to review your beneficiaries that you have it in some time. And here are some reasons. Life events, why a review may make sense. Marriage, divorce, the birth of a child, the death of a named beneficiary where you have to redo your beneficiaries. As we at Wespath continue to transition to a paperless environment, we encourage participants to use Benefit Access to review and update their beneficiaries. You can see an example of the screen here. And you also have the ability to designate beneficiaries by plan. You don't have to do it once for all plans. You can specify the individual plan. Next, I will touch on EY. EY Financial Planning is truly an advantageous program for you. It provides confidential, professional financial counseling for you with no out-of-pocket expenses, no additional cost. You have access to financial planning guidance on an unlimited basis. You can call them as often as you need to get your plan in place through, you call them by telephone. It's objective, it is consultative, there is no sales pitch. They can help you with retirement planning, how to position your assets in retirement, debt management, are you thinking about purchasing a home, estate planning, maybe college funding for children or grandchildren, things like that. They are a resource that can help you think through your upcoming retirement, especially during these uncertain times. Please note at the bottom, you will see that this is available to those participants with account balances of at least $10,000. So take a look at your account. If you have that or higher, we encourage you to give them a call. Now here is a great example of how EY is a resource to you. They are hosting a webinar to share their views on these turbulent and volatile markets, and they will provide their thoughts on managing investments during this time. Now, as you can see, there are two 30-minute sessions available. One of them is right around the corner tomorrow, but you can still register for it. One next week, April 7th, if you want to register for those. There's 2 time slots there. Go to wespath.eynavigate.com and register for that webinar as you registered for this. Now I will spend a little time with Benefit Access and illustrate the benefit election process. It is important for you to register and become familiar with the screens within Benefit Access. Go to our homepage at wespath.org and you will see in the upper right-hand corner a button that will direct you to retirement benefits, which is Benefit Access. Within Benefit Access, You review your account information, beneficiary elections, investment information. We have educational resources and materials for you, topical videos on such items like Social Security, as well as tutorials as to how to use benefit access. But most important for today's purpose, and you'll see this towards the top, you will need to complete your elections by June 30th, again, using benefits access. We encourage you to complete your elections prior to June 30th, so maybe target June 25th. But as been mentioned and will be mentioned again, any election that you make before June 30th, you can change or revoke. You're not hooked into it by one time making an election. The screen here is the individual participant homepage, hopefully familiar to many. You will notice something new on this screen. Bob referenced it earlier. The green review button, review retirement benefits. This button appears when we have received from your annual conference your intends to retire date. Click on this button and we will proceed to the retirement election portal. There is a lot of good information on this screen. Toward the top, you can see a summary of your estimated monthly benefits, both the annuity payments and from your account balances. Within each, we break down by plan, CRSP DB, the MPP 65%, and pre-82 if you have that, as well as within the account balance area, MPP 35%, CRISP DC, and UMPIP. And further to the right, you can see an estimate of your total monthly income. As you move down the page, you can see a further breakdown by plan of your estimated benefits. The lifetime income again is by plan, CRSP DB, MPP 65%, pre-82. We group these lifetime income benefits here because these are the guaranteed amounts you will receive when elected. And further toward the bottom is the area of your account balances and an estimate of monthly income from the account balances. And here we are assuming you are taking advantage of the life stage retirement income service. Now you can see next to these monthly payment amounts, there is a blue button. It is a get started button where you will make your elections. You click on that and go forward. And I will quickly go us through how we would do a CRISP DB setup. Before we progress through a series of screens to illustrate this, I just want to point out a couple of things. You will be presented through these screens with some questions, some choices that you'll need to make around life and survivorship annuities, COLA percentages, and what have you. There also may be times where we will ask security questions and what your answers were so that we can validate and verify who you are. We are doing this for security purposes. And then lastly, have your checkbook available, and you'll see why momentarily. As for this particular screen, you are simply indicating your benefit commencement or first payment date. You go into that box there and select July 1, 2020. After you elect your first payment date, you move on to designating your contingent or joint annuitant. If married, we provide you certain information about your spouse and pre-fill the election that your spouse will be the joint annuitant. You can see that filled in button towards the bottom. If this is the case, please click on the verify button and you can continue. However, if you have decided due to your financial planning to not have your spouse as the joint annuitant, you can indicate that as well. But please note, we will need a notarized waiver of consent to waive being the joint annuitant for the benefit. This is an area where you may want to give EY or us a call just to make sure you understand how to set it up according to how you want your financial plan to look going forward. You will recall that within the CRSP DB benefit, there are 2 service periods, each with its own calculation. On this screen, we break out the 2 service periods, and you elect the type of annuity you want from each. You make an election for the service period of 2007 to 2013. You make an election for service period 2014 to the present. And note within this second period that you can elect a single life annuity if you so choose. On the bottom of the screen, you will see where you elect the COLA you want applied to your annual income. Now remember, there is a minimum 2% COLA with CRSP-DB, but you can go as high as 5%. Now that area at the bottom is a little small, so we've taken another slide to make the COLA election look a bit easier for you. There is a drop-down arrow button that lists the percentages available. you simply click on the down arrow and select that percent. Again, 0 to 5 for MPP, 2 to 5 CRSP. A very interesting exercise can occur here, because as you select different COLA percentages on this screen, the estimated initial monthly payment amounts on the right-hand side will change. So as Bob illustrated earlier, the higher the COLA, the lower the initial benefit. And you can see how that comes into play by utilizing that COLA percentage here on this screen. The next area of focus surrounds tax information. The top section of the screen asks you for verification by providing the last 4 digits of your Social Security number. The bottom area is specific to your tax situation. And given we are in the time of the year where we are doing our taxes, or thinking about doing our taxes, and even though we have an extension to July 15th, this is a great opportunity for you to have a conversation with your accountant or whomever helps you out with your taxes, so you can think through how you want to set up your tax withholding elections. And in that conversation, you want to understand how your state of residence requires you to set up tax withholding on these payments. If there's any requirements or not, it's a state-by-state thing. You want to understand how your state will react to tax elections on your retirement income. You can see here there is an area for federal income tax, an area for state income tax withholding elections. Now, please note before I move on, here you can change these elections as your situation changes over time. So whereas once you elect an annuity, once you elect a COLA percentage, that's locked in. Here, as circumstances change over time, you can change your federal and state tax withholding elections. The next section is to provide us with your banking information so we can set up direct deposit into your account. So again, having your checkbook handy, we would provide the bank name, the account type, checking or savings, then the bank transit routing number and account number. And the illustration to the right-hand side of the screen, you can see where on your check you can find those numbers that correspond to the fields to the left. And then we'll also ask you for a bank phone number. When that is complete, we continue forward to verify your election before submitting it. Now here is another screen where there is a lot of information, but this is a compilation of the specific benefit election you have just made. By reviewing the page top to bottom, you can confirm your choices before submitting it to Wespath. After you have completed the review, you will be asked to acknowledge this election. You will indicate you have read, agree, and understand the elections you have made. And then on the lower right-hand side, you can hit the submit button, and that will submit the benefit election. So that's a quick illustration as to how one would go forward in making their benefit elections. And we've said it a number of times, but I will reiterate. We encourage you to complete your elections prior to June 30th. However, elections you make before June 30th, you can change or revoke. And as you're getting started on this, you want to make sure you have your password available, the questions, the security questions and answers, your checkbook and things, so you can just move right through swiftly. Now, as you head into retirement, you may be approached by financial advisors or people presenting different financial opportunities to you. And that may get you thinking and pose the question, for what reason should I keep my money with Wespath? Well, here are several reasons. They are not in any particular order, and I'm certain these are not all of them. But in just looking at this screen, several things jump out at me. And first is right in the center, the clergy housing allowance preservation. As Todd shared, your benefits in retirement from Wespath are eligible for the housing allowance designation. If you roll that money over to another type of investment, it is not certain whether or not that investment and that investment house is going to be able to designate those retirement dollars as eligible for the housing allowance designation. A critical conversation with an accountant or an estate attorney before you were to do anything like that. Also, if you look to the bottom, flexible retiree loans. We didn't really get into this in UMPIP earlier, but just as you have a loan provision available to you while you're still in ministry, you have that same loan provision available to you when you retire. Request a loan, we set it up, we begin taking payments out of your account. You have EY financial planning services available to you. Again, a great benefit. And then we just think about the investing side of Wespath and who we are. The sustainable investing, sustainability. And it's not only for our investments to hold up over time, but to uphold the values of the United Methodist Church. We promote environmental stewardship, human rights, sound corporate governance, and we believe that creates long-term value. Our expenses are very low. They are very competitive against our peers in the marketplace. And what that does is we are leaving assets where they belong, in the funds. And then at the top, we have the autopilot solutions for you. These programs in place for life stage investment management for your account balances, and then to set up a stream of income to last, to your normal retirement age, your normal life expectancy age and beyond through life stage retirement income. These are products, programs, and services that are valuable to our participants. Now, before I send us back to Bob Christophel, here is your retirement team, a dedicated group servicing our retiring participants. They are here to assist you all through the process. They are there for you. Do not hesitate to call them with any questions you may have. There is the number there on the screen. Now I will transition this back to Bob, who will talk on a couple of other items and then bring us home.
Yes, thank you very much, Frank. And thank you all for lasting this long. We went a little bit over our time slot. Again, this is Bob Christophel. Just wanted to remind you of these one-on-one personal consultation opportunities. We do have a link set up to schedule those, which you can start to use right now. The link is on the screen. These will begin next week and continue in the 3rd and 4th week in April, and we'll continue to add slots as needed. We certainly want to hear your questions. We at one point had 287 attendees on this webinar, which is just a record-breaking attendance for a webinar. Just a few more thoughts I wanted to share with you. Be on the lookout for that email from Cheryl with the recording, and that'll also have the link in it as well. We have also expanded our support services for you and other clergy retiring this year. Yesterday, we just announced a video series on topics like the ministerial pension plan, annuitization, health flex, loans and distribution, and much more. And those are going to be, very short informational videos. So be on the lookout for those. We've also had videos about to be released or released already from Dave Zellner, our Chief Investment Officer, and Barbara Boisjograin, our General Secretary. I want to thank you all for participating in this webinar. It has been a fantastic experience. I want to congratulate you and bless you on your retirement. We will continue to care for those who serve throughout this retirement process. I do look forward to you scheduling those consultations with the benefit education team. We want to help you in any way we can. I just want to offer you congratulations and blessings. And I'm going to turn it back over to Cheryl just to close this out. Thank you all for your participation today.
Thank you very much, Bob. And again, I did want to make sure that everybody was able to see the great presenters that we actually had today. So here's that slide with everybody's nice smiling faces. So again, once this recording is completed, then I will be able to send that out to everyone who is registered. Again, thank you very much for everyone's time and attention today, and we look forward to serving you in the future. Take care and stay well.